Hello everyone, this video is only for entertainment purposes. I am not a financial advisor nor I am a licensed professional. So if you're planning on investing, be sure to do your own research, take your time, and invest at your own risk. Now with that being said, welcome back to Prime Growth Investment. This is your boy Ali and I'm back again with another video. And if you're new to this channel, hit the subscribe button. Don't be shy and hit the bell notifications so you can watch more of my videos in the future. And guys, before we start the video, I want to mention my YouTube Portfolio 2021. This portfolio will be talking about the stocks that I mentioned in my previous videos, and we're going to see the average cost per share, and we're also going to see the most recent price after the extended hours, and as well as our gains and losses. So if we take a look, we can see NEO was going up 20% since I mentioned it. CCIV was going up 9%. ZOMEDICA was going up 16%. But we also see losses here and there. But these are all going to be in long-term investment. My portfolio is mainly about long-term investment. So we just gotta put our money in there and let our money work for us. And especially with the general market correction that is going on for the past 3 weeks, it is expected for us to lose some money. But once again, these are going to be a long-term investment. So you just gotta be patient, hold your money, and let it work for you. Now, let's go back to today's video. Today's video is going to be about SNPR, also known as TORTOISE Acquisition Corporation, and this is a SPAC planning on merging with a EV company. And the EV company they're merging with is going to be VOLTA, which is an electric vehicle charging stations. However, this company is different. The reason why is because this company is already generating revenue. So they have the product out there in the market, and they are taking the charging stations to a different way. They're going to install screens on their charging stations to allow for advertisement to play while the consumer charge his cars. So this is a great idea in my opinion, and they are going to be placed in a busy areas where you can see such as shopping centers, plazas. We're going to see them in the malls, which is a great opportunity for other companies to advertise their product while the consumer is charging their stations. And if we scroll down right here, we can see they are going to rethink the media strategy. They're going to grow their network of charging stations to allow to reach millions of qualified consumers with premium place-based interactive content in a sustainable format. So they're not only a charging station company, but they are as well as a marketing company for other companies. And if we take a look, they have over 450 million monthly audited impressions, and they have reached over 70 million customers, and they have 44% increased purchase intent, which is amazing in my opinion, especially for a company that is going to go public very, very soon. They're planning on going public in the second quarter of 2021. Their current price is $11.82. And for those of you that don't know, a SPAC generally is about $10. They trade around $10. So as of right now, it is at $11.82. So our chances of losing money is very, very low. The chances of going in below $11 is very, very low. But our chances of winning and gaining profit out of this company is very, very high. Just right after the news of merging with VOLTA, this SPAC company went up over $18, and they were trading sideways for a couple of days. But then immediately we had correction. We had correction in the general market, and then it took a huge dump, and it was bleeding until it reached below $11. And right now it is almost at $12. So if we can get in below $12, our chances of losing money would be very, very low, and us winning and gaining money would be very, very high. Now let's talk more about the company. What does this company do? So if we take a look right here, we see that this company has charging stations in 23 states in the United States. And the company has over 3,000 screens installed at their locations, which is over 459 sites. And the company expects that the electric vehicles are going to come down in the next 3 years. So the prices of the electric vehicles is going to be lower than the regular cars, which means we're going to see more electric vehicles drivers, and they're going to need charging stations, and this company is going to provide them with the charging stations. And we're also going to see that the President Joe Biden calls for more than 550,000 charging stations. So we are leaning more toward electric vehicle consumers. The comparison to gas stations in the presentation, there's a portion of $500 billion revenue that is going for gas stations. So gas stations are actually generating $500 billion in revenue, and that is coming from over 150,000 gas stations. Now, these money, once we see electric vehicle drivers around in the streets, the money that is this money is going to go from gas stations companies to electric vehicle charging stations company, which is amazing in my opinion. So there is a lot of money waiting to be collected by VOLTA. Now let's take a look at their presentation. The company mentions there's a lot of commitment going on toward electric vehicles. We can see that BMW, they committed a lot of money into electric vehicles in the future. We can see that Ford did the same thing, General Motors did the same thing, and Volkswagen as well. And we can also see that Tesla, NIO, Lucid, they are already planning on making their cars very, very soon. And they're expanding more and more in the market, which is just amazing. And on top of it, the government is also supporting electric vehicles market, which is really, really amazing. And if we continue to scrolling down right here, we can see that's what I mentioned, that the gas stations in the US, they generate around $500 billion. And if we see more electric vehicles in around, that money is going to go to the companies who charge the electric vehicles. And right here, they mentioned, we believe our revenue is sustainable and stacks over time. So in 2020, they generated $25 million. And they are forecasted to generate $47 million in 2021. And they are planning to increase the revenue over the years. And by 2022, they are going to break even, meaning they're going to generate profit after 2022. And right here, we once again mentioned the electric vehicles will be cheaper than gas cars in beginning, in 36 months from now, which is 3 years. So as of right now, electric vehicles are expensive, and it's mainly because of the equipment, such as charging batteries. But eventually, the charging batteries will be cheaper, and other equipments will be cheaper to allow electric vehicles becoming cheaper. So if we take a look right here, once cars become cheaper, the demand for electric vehicles is going to be high. And once we have so many cars in the streets, we need charging stations to charge these companies. VOLTA, ChargePoint are going to be leaders in charging stations, in my opinion, in the future. This is why I'm holding this company for a long term. Alright guys, so this is it. VOLTA, the charging station that is going to go public in the second quarter of 2021. We don't know the exact date as of right now, but it is a good opportunity, in my opinion, to get in below $12 because this has the chances of being above $20 very, very soon. If we take a look at ChargePoint, it is above $20 once the merge happened. And in my opinion, VOLTA will be right there in the future. So try to get in below $12. If you couldn't, if you missed a chance, try to get in at $15 or below. Let me know in the comment, what do you think of this company? Are you going to invest in this company? And on top of it, let me know how your portfolio is doing. I hope you guys see some great gains in the future.